Hello again. So we are having a quite interesting panel. Many interesting panels today. The one now is about investment and the investing in crypto, the space, and we are quite happy to have 4 guys here on stage who will share with us their insights. That's too strong. They will share with us their insights, and we'll take the same format as we had. So we make a short introduction where you just present yourself and your activities, and then we have 3 questions, more or less, which we are going to be able to discuss, which we're open to basically respond to it. So maybe ladies first. So Jasmine, maybe.
Okay, hi guys. Yeah, very nice to be here. I'm Jasmine. I'm a co-founder of A&T Capital. It's a new fund. We started last year in April. Yeah, so it's a 100 million fund. So we were very connected. We're very well connected with some of the biggest fintech already in the world. And our fund is more of a product focus. Because most of our co-founders or team members actually come from product management a background. So some companies like Alipay, Alibaba, or TikTok, Facebook, and Twitter. So we want to help projects to build a real product in the crypto space. Yeah, very happy to be here and thanks for the invite.
Okay, cool. Sounds cool.
Hi everyone, I'm Patrick. I head up 𝗟𝗃𝗃𝗃, which is a crypto fund of a generalist seed stage fund called 𝗟Ventures, which has been around for around 7 years. And 𝗟𝗃𝗃𝗃 we launched at the beginning of this year, which is a 30 million euro first check fund into Web3. Yeah, happy to be here.
Okay, cool. Sounds cool.
Hi everybody, my name is Dusan Kovacic and I'm the Chief Investment Officer in Rockaway Blockchain Fund. We are a venture fund and a research company that has historically been focusing on infrastructure, and we want to focus on it moving forward as well. So this is our main business, but in addition to that, we have a liquidity arm that does market neutral strategies, including lending to market makers and to DeFi protocols, and engineering arm that does staking and building products on top of the companies we invested in.
Interesting.
Last but not least, thanks Sven for the moderation. Great to be here. My name is Alex. I'm the founding GP at a micro fund called Inflection. I'm based out of Berlin. We're currently running the second fund at 40 million in volume with a focus on the earliest stages. That's mainly pre-seed and seed, and a global mandate. I started the firm about 4 years ago, 3.5, or 3 years and 9 months or so by now. And we used to call ourselves a generalist specialist. So we have a pretty broad scope of activities, but what we care about are open, composable systems across the stack, investing into infrastructure, but also all other rising categories, be it DeFi, be it interfaces, decentralized science, or other more nascent categories.
Okay, pretty cool lineup, I would say. So I see you're very familiar with crypto, not just jumping on board, but you're grown up with it and you're basically crypto natives. So you have seen the market developing from over the last years. And the question would be maybe, what could you observe? How the market developed? Did it begin cooler, greedier? How did I don't know which, is it my mic?
Maybe put it a little further.
Okay, so I don't know what's the right distance. I think so. Okay, let's try it that way. So, what could you observe over the last years? How did the market develop? What are your specific approaches to it? I like very much to see that each of you has a very own approach. And are there any kind of thesis that you are following, or any specific approach you're going after? Or maybe if we look back, we have seen one thesis basically shaping crypto for a while in investing. That was the Fed protocol thesis created by 𝗵𝗲𝗻𝗔𝗔𝗍 from Union Square Ventures. Lately, we have heard about the Fed app thesis. Is that something that you consider in your job? So maybe let's start with Jasmine again.
Always ladies first. I love it. So, yeah, definitely. So I think I'm actually quite late into crypto space. I'm actually only in the space since 2019, start of 2019. But I think at that time I was very lucky. I'm in Berlin, actually based in Berlin, and then was like many great projects they started. I mean, at the time has all the OG Ethereum projects were able to create a very engaging environment. You can always have a great meetups here to learn and to also kind of mingle with people. I think now I see definitely after 3 years, it's new faces, a lot of new faces, and then more people with different backgrounds, and also more younger people in the space, definitely. And also I think secondly, at the time there were Ethereum, one of the strongest, biggest community, but also there were so many smaller kind of L1s. I remember one of my first meetups I joined was from Quantum, and now it's also a Chinese project. I don't know where are they anymore, and also EOS, they were still kind of doing DPoS kind of a voting for them, and then but now it's kind of replaced by the next generation of the ones the Solana ones, the Neo ones, the AVAX, and now even the further Aptos, Mr. Labs, and so on. So I think I'm really happy to see these the ones they started to have their own communities. So I actually just came back from Lisbon for the NearCon, and then I'm happy to see they have actually attracted a lot of Russian speaking kind of nerd communities. So it's a positive thing. I mean, I'm just really happy to see there are more, decentralized L1s as well, even though Ethereum still have the, biggest, innovative community over here. But I definitely believe it's going to be more of a, agnostic, a multi-chain world. So, that is my second observation. And then thirdly, you mentioned about the Fed application, new thesis. I definitely agree. I think previously, VCs always like to invest in layer ones. I mean, now we also like to invest in layer ones. Also invest in business labs recently. But I think that is just less and less can distinguish your fund with others, because layer ones, of course, is more imagination. Everyone wants to have a bag on it. But I think what really distinguish you with the others is your value add, your edge. That's why we started to establish ours, which is a product. So we feel layer ones started to be more mature, and it's kind of a time to really build your real a product, which going to be really in demand for the users. And then, I believe in the Fed application protocol, especially now applications can start to really more and more capture values. They can just deploy their product on different chains. They can also just build on their own chains by Cosmos SDKs and stuff DivityX stuff. So yeah, why not? So definitely going to invest in more applications. Well, of course, also looking to more infras. Yeah.
Yeah, I mean, maybe that's the first question on what's changed. I mean, so we launched the crypto fund at the beginning of this year, but we've been investing in crypto with Cherry since 2018, and I think quite a bit has changed. I mean, maybe just beginning with available capital. Compared to 2018, there's just a lot more capital that's readily available to be deployed into crypto. The investing landscape and investors willing to deploy into the space has multiplied, which is great for entrepreneurs. I would say generally, if you look back as well, there's just a lot more infrastructure, a lot more tooling, a lot more that's possible for people to come into the space and build on. And that I think is very different to 2018, where a lot of the building blocks had to be built. And I think today you just have people, whether it's designers, infrastructure developers, whether it's people with, very, very little software engineering skills. I think anybody can build something in crypto, and I think that's just incredibly exciting. And I think just generally crypto is much more accepted as something that is real and here to stay in the collective consciousness. I think if you look, as we're sliding back into a bit of a bear market, and the difference between now and 2018 was in 2018 it was more a question of is crypto ever going to come back? That was, I think, an existential question a lot of people ask themselves. I think the resounding answer today is it's absolutely here to stay. And I think that is, I think a very, very big difference. The second question with regards to like how we invest across the stack. I think you have plenty of examples of investment opportunities on the protocol layer, but then also on the interface layer that have accrued a lot of value. So we don't really, distinguish investments along those lines. We invest across the stack, and I think it's been shown that you can, accrue a lot of value in all types of investments. Yeah.
Okay, cool. I think we all like to hear that confidence in crypto. Crypto is here to stay.
Yeah, nobody is challenging crypto anymore. I like that as well, and especially from the investor base. I mean, we were raising our fund. We initially had the first discussion in, I would say, 2018, and people were challenging is this not just a speculation? And we always understood that the best way how to express that it's not a bullshit is show by example. So we were sending stable coins from one investor wallet. We installed wallets onto investors' mobile phones, and we were sending stable coins. And we expressed the way you can be here, or you can be on Mars, or you can be in some different country. They will still arrive in the same time. And at that time, the fees on Ethereum were quite low, so it was very convenient to do. But I would say from the investor perspective, a lot changed initially. Investors invested pretty much into new design of layer ones. Yeah, there was no other topic to pretty much care about. I mean, everybody saw, okay, Ethereum is slow, Bitcoin is slow. There has to be some change. So we are going to bet and find the change. I mean, there was EOS, there was Ergo, there was many attempts to solve the layer one scalability issue. Initially with sharding, which turned out to be probably not the fastest to market solution. And then, there was Avalanche and Solana and all of this. But it was all focused on the infrastructure per se, especially focused on L1 scaling. I think the whole vertical of L1 scaling is still here, and we are definitely not seeing any final design that is out there on the market. I think the introduction of zero-knowledge cryptography is really changing on how the layer ones will operate, especially in the future. While right now the consensus is achieved that every node replaces each computation, and then given that it's deterministic computation, they will just compare the results and then they match. It's the valid computation. With the introduction of ZK, it's pretty much one node calculates the computation and each other nodes just verify. So we are still seeing a lot of opportunities in infrastructure, but that's just, I would say, a very small subset on all opportunities that are out there right now, because infrastructure is one part. There is the globalization of financial services. People call it open finance or DeFi. There is still trading. There could be a lot of innovation on trading as well. And there is a large emerging vertical on the consumer side, especially with the open economies that blockchain enables to create, for example, in gaming. And I believe that this is one of the biggest opportunities that are just being created right now, is the rise of this, I would say, open economies that have initially very niche and dedicated audience, but that this can be ranging from a small audience tycoon game or a comic or anything similar in this vertical. So I think we will see a massive universes based on this very niche, initially a small audience that will just grow. And I would, that's pretty much the landscape how we see it in RBF.
Okay, interesting.
I try to take a bigger step back maybe and look at some context. When I went to the first Ethereum meetups here in Berlin 2015, I think we met in 2016, Sven. There was a tiny community with just a lot of, I would say, urge to experiment. And back then it was very hard to foresee what would come next and why. And looking at the landscape today, I think there are many dimensions that are fundamentally different from when this whole thing started. Looking at developer numbers, for example, there's a pretty good and transparent report coming out on a yearly basis by a firm called IndexVentures Capital in San Francisco, basically sketching the developer landscape across protocols using mainly GitHub data. And I think that's already about a year ago. We hit the 200K mark what is pretty impressive growth on a very short time frame. Yet in absolute numbers, it's still very, very insignificant. If you look at market caps, obviously they're very volatile. We crossed the 2 trillion mark for a while. Now we're back to 1 trillion, but I don't see this as a strong expression of product market or industry market fit, really. So there are about 100 million people globally holding Bitcoin, more than 200 million addresses generated. So often people have multiple addresses, and it's not so easy to track, but it's still a very small number of users overall. What is more interesting, I feel, is what Patrick already said, the awareness factor. That's the breadth of users and use cases we explored mainly over the last 5-6 years. What started with programmatic money, Bitcoin, evolved into this whole ecosystem that DeFi is today, that is still very, very nascent, very young, immature. But highly composable and open source. So people are learning from the mistakes others made and are iterating quite fast. And then we've seen a completely different audience that was not only technical or financial people, but then also through NFTs, generative art, generative music, the creative scenes that up until that moment had never any touch points with this industry or didn't get the concepts, and now suddenly they had something to experiment with, a new set of tools, what I feel could really turn into a new medium, almost like photography. What photography was for painting, this stuff might be for just digital generation of any kind of aesthetic output. Those are couple of thoughts, and there's way more on the horizon. So we're currently seeing a lot of really communications infrastructure running on-chain messaging, on-chain CRM systems, user segmentations that just work fundamentally different and have unique value propositions that, particularly in times of turmoil and insecurity and hacks and data breaches, will play a significant role. And on your question, the second question on where do you invest, thesis, etc., there's also I would say, a big negative part of the overall venture industry, and that is short-termism. So there are a lot of funds investing into the next kind of flavor of a layer one that doesn't really have something sustainably differentiated. We see right now a lot of developers revolving out of Solana into Aptos, into a few other layer ones, mainly driven by short-term incentives and airdrops or grants. I think that's an overall net negative for the industry, as it creates a lot of friction, a lot of distraction and speculation, what ultimately will trigger harm, be it from the regulatory side, be it from the public perception of this industry being all about speculation and scams. What for us as a firm is one of the most defining elements also is just longevity. We would like to work with founders and projects that want to build something over 10 years and last and make a dent into the universe. We're not interested in like short-term speculation. That's a little bit related to the Fed protocol thesis. I think there will be models. If you look at Ethereum's current model, happy merge day, everyone, by the way. That probably will likely be valid also long term, as it aligns the incentives of the network and the ones holding the asset. There might be others like MakerDAO, so that should be economically sound. But then there are also a lot of others that were in earlier days betting on I would say, currency status that requires you to have a monetary premium. That is a subjective element, and very few assets in the world ever achieved that. I'd say even Bitcoin didn't achieve that yet. It's a lot of ambiguity, but I'd still say this Fed protocol thesis isn't completely wrong and also hasn't been proven completely right. And we're also investing across the stack for that reason. Okay, cool.
I have one point actually. I don't think, even though like we didn't invest in Solana, I think we share similar kind of views, but I don't think it's 100% like negative things, because at least like Solana was able to attract so many like new developers like into the space. I was in a few like of their hacker houses. I mean, it spent so much money in like providing them like a really great atmosphere like to hack and so on. I mean, compare with, I don't know, like a Polkadot, I mean, they could have also done like so much more to like get engaged with like developers and so on. So I guess, it's cool to have the space more diversified, not just like people are focusing on kind of different things. Like maybe Solana is really good at marketing or something, so they were able to bring just new faces like into the space. So I guess still have some positive like things like inside.
It's true. There are also like at least short-term benefits to that. I'm also all for like experimentation, and
For sure.
that is just an example. Right? You could take any other layer one. I'm just seeing a lot of people that's developers, but then also holders of these assets just rotating very quickly. And I don't know if that's on longer time periods a healthy thing or rather an unhealthy development for the industry. So like ignore the names. I mean,
we're all like I think 10 years fund, so like it's all like long term for that. So yeah.
Okay, but it's interesting then to see that you just don't consider the game over and basically having now Happy Merge Day, Ethereum being the winner of everything, and other L1s not having any justification. So this is going to stay a multi-chain world while the apps are growing in importance. So also, a question which is in the room, it's the bear market. So the question is, are we in a crypto winter or not? How long is it going to stay? I mean, this is pure speculation, and there's multi-cycles which are following. So usually it's like acceleration, break, and then it restarts building up slowly. I heard from you, Alex, that you're looking into when investing into multi-cycle investments and periods, so not just jumping on the last hot topic and then hoping to exit within, let's say, 24 months, but you were mentioning 10 years. So I could imagine, but this is something I would like to hear from you, how it is to do investments right now. Is it advantageous for you and for the founders because the valuations or the expectations have come down, or because the hypeness has a little bit cooled off? And what do you think about the macro environment in general? How could or does this affect your investments or the blockchain space in general? Maybe just to put this in context, if we look at the blueprint for all the blockchains have been Bitcoin since over 10 years now, 28 or so, 29 it was launched. And this was a response, to certain discontent to the governments and central bank management of public goods. And actually it created kind of an alternative option to people not having to rely on that only on the power in place. And now we have again some geopolitical shifts coming up. How could this affect the blockchain space or your investments? Do you take this in consideration? Do you have the global market in your perspective? I think you have it. So how do you think that the macro environment could basically evolve, and the blockchain space and the projects within it?
Stuart, ladies first.
Oh, I can also see if someone else wants to pick it up.
Maybe I can pick it up.
Yeah.
So in our view, of course, everybody recognizes the macro risks. We don't manage them on an individual investment level. We manage them on the fund level. If we see like and we saw that at I would say in Q1 2022 that we are seeing a huge, I would say, macro risk. So we de-risk the fund, like where we saw that the project have maybe they are not like that the valuation is really like outrunning the real world, I would say, adoption. We have de-risked the fund and sold and returned money to the investors. while we have kept the all other portfolio, I would say, intact. That's from the macro risk management of the fund. On the individual investment level, we love this market. I love this market because there is like the founders are still equal quality that they are in the bull market, and right now the terms are, I would say, much more favorable. Yeah, like when 1 year ago the valuations for seed rounds are like 30 to 50 to 60 mil, which is like incredibly high. Right now, the same teams are raising at 10 to 20 million, and you have actually the time to do the real VC work. Yeah, like you meet the founders, you have a good time with them, you help them, you understand their problems, how you can contribute, and then you help them to get to the relevant parties. You connect them with other investors. You give them technical advice. Maybe you just recommend them to security auditors or any other company they need to get into. So I think. From the investor perspective, from my perspective as an investor, I see now the opportunity for fund to really grow or to step up the game and to compete with the American. Because right now, if you have a thesis and you know what you want to invest in, that means you can be fast at decision making. And right now we see, I would say, most of the investors are stunned and they are waiting and they're like deciding longer than they were deciding in the bull market. So you can close deals which you otherwise couldn't.
Yeah, I think as an early stage, long-term oriented venture investor, you have to be aware of the macro environment, but we certainly don't let it define our behavior. I think we're obviously uniquely aware that rising interest rates results in a fall in risk on assets, which crypto assets obviously are. I think then you have to look at what happened in crypto specifically over the past couple of months, with the fall of implosion of Luna, Terra, the insolvency of certain lenders, and then the implosion of one of the biggest hedge funds. I think that's something we're aware of, that's something we look at, but it's not something we use and influences our investing behavior. I think the best time to, the style that we take is we invest with patience and long-term orientation. So just like we don't go, absolutely crazy and invest our entire fund over a year in bull markets, we don't pull back during the bear. I think we're consistent with our behavior, and it's always with a long-term time orientation, which we'll continue to do regardless of the market condition.
Cool to you. I also, just adding to that, first of all, there are basically two bear markets you could possibly talk about, right? One would be on the macro side, where it's typically defined as at least 2 quarters of negative GDP growth, or it's likely to happen at least across the Western world, maybe China. So pretty sure that this is going to happen, and then you can talk about recessions and also corrections in S&P 500 market caps. But putting that aside, the outlook isn't very rosy right now, as there are a lot of very deep fundamental shifts currently happening. We got an energy crisis. We are still suffering from COVID supply shocks. We got war in Europe. We got tensions between US and China. So there are a lot of big variants and big factors that are up in the air, and we don't know in which directions they're going to move. And I think this, like the setup right now is very different from anything we've seen in the last 40, 50 years. So we spent like a couple of weeks interviewing people from like macro hedge funds and getting all the like insights you could possibly get with a small concentrated team. So we are still in the early innings of these developments, even if it's only a, say, regular bear market like in the 70s or 2008 or so, whatever you use as a reference, that this could go on for 2 years. The supply shock mechanics typically have a cascading effect. So it starts with supply shock, then you got to inflation, then you got to interest rate hikes. So that's where we currently are, and that will translate into economic difficulties, maybe higher unemployment until it settles into the next cycle. So all of that is very hard to ignore because it will have an effect on some of the underlying assumptions you made by taking specific bets, right? So there's probably less money for, say, cultural goods, for maybe even speculation in a world where people are basically cut back in their spending behaviors and or maybe lose their jobs and need to focus on what is essential. And at the same time, I see this also as an opportunity, right? Because there will be other challenges. So we see this right now in Ukraine and in Russia, particularly, where the crypto adoption has always historically been comparatively high. But right now, these two countries are number one, number two in terms of crypto holdings. And that tells you something about the essential relevance of these assets in times of tumult or even war, that are empowering individuals to basically save their or get access to the assets that live in the cloud and move out of the country, or get themselves in a secure place. So I believe there's a lot of fundamental drivers that will help us get more adoption and make people aware of this asset class. Another piece would be the relevance of renewable energy. I think this is was already quite high up the agenda, at least in Germany. Now it's very much so the case in the whole of Europe. And there's a lot of interesting research and experiments coming out of the Bitcoin mining community right now that I believe will lead to the a clearer picture of which role Bitcoin mining can play in the context of the transition to renewable energy. And that's mainly in the context of, it's called demand response, basically using miners as load balancers in times of electricity oversupply, what you typically have in grids with very high renewable energy exposure. So there are a lot of big drivers that come from macro that will have an effect on what we do, at least in the next 3, 4, 5 years. But then again, what Patrick said on a fund level, and also Dusan, on a fund level, it's very difficult to, for example, adapt your investment pace, go faster, raise the next fund, or slow down, as your mandate, the job you basically have is to get investors a multi-year vintage exposure. So you typically deploy that capital over 2, 3, sometimes longer, 2, 3 years to exactly hedge against these kinds of macro waves you cannot control anyways. That might be different for larger funds in later stages. They are, I feel, more directly affected, as whenever they take a bet in pre-IPO stages or so, the macro risk of an IPO freeze, for example, is way more present than it is in a pre-seed seed fund, where these questions become relevant after year 7, year 8, and you cannot time anything on an 8-year timescale, really. So I'd say the earlier you are, the more sheltered you are from direct macro exposure.
I guess I just all the three guys already talked a lot, very comprehensive. I think it's just during the bad times, we can also see a lot of opportunities. So only one old word is collapsed, then there will be new orders started. So it'll be probably a great time for real applications started to pop up. And then I guess it's for fund level, we don't really, it's 10 years fund, so it's not really changed so much. But also I think for the bear market, it's just important to there will be a lot of noises, people sometimes will found there's no people around you. I guess you look a lot on Twitter and stuff, but it can be really noisy. A lot of influencers, they can have a lot of talks based on their positions. So I guess it's important for the founders in the bear market just to really meet the founders in real life, and then talk more and started to think of new models to build and so on. So yeah, I guess just compliment a little bit what they have already said. Yeah.
Cool. So I think it's really very interesting for our founders to listen to you, to, how you see the markets, how you approach the investments, and because you also differentiate yourself from traditional investors who are not so close to crypto and who don't understand also the needs of the founders. So I picked up, Dusan, you have also beyond the typical investment areas, you're also into research and coding. So I think this is very important for founders today, because the the crypto space is complex, as we know when we build on it. It's complex on the technological level, on the incentivation level, the tokenomics, and the legal level is challenging. So it's always good to have a partner who is into the topic, and you don't need to educate. So I was wondering, we talked also earlier about DAOs, and one observation you could make in the past year was that several DAOs just formed themselves and raised money not through an ICO, but was a token sale, and in many cases NFTs, for example, to raise money. And once they raised the money, they had a treasury to then, for example, invest in interesting projects. So how do you perceive the investment DAOs as a player? Do you get across them? Are you competing with them for interesting projects? Do you deal with them? Do you co-invest with them? Or do you just ignore it?
I think no one would really ignore it. It's like such a new form of like investment, and definitely, I mean, I was also participant like in multi-capital and so on. I think it's definitely a great way for like a supporting like a very early stage like like a projects. It's like a very early just idea level or something, and then you were like kind of encountered with like a group of people where they have different kind of like a specialization, and then could really help you to boost. Like some founders kind of like dislike it. Maybe like they have really interesting idea. They don't want others to copy it because it's, also kind of like sensitive like stuff. But like in general, like we actually work with like investment DAOs, and I really like them. I personally also invest in those. I think it's just like a new form. And then a lot of things I think no one will really predict. Just like the same as like the narratives of a DeFi farming or like NFTs, like who would see them coming? So I definitely think like for us would be like very open-minded to actually like work with them, and then like maybe one day that will become like the new form. Like who knows? So I think it's better to already get a step like a stake in it, and then like to see like how we maybe both sides can like complement, and then to support like founders together. So that is my view.
I mean, I think with everything it really depends. I mean, there's some investment DAOs that I think are good and add value. I think there's some that are less good. I think my general view on investment DAOs is like investing is, if you want to be, I think, a good investor and add value to projects, work closely with founders, it's a full-time job, and it's not a job you can do on the side. And I think sometimes investment DAOs just lack that focus. And perhaps, I think founders are going with the wrong expectations as to the level of involvement those investment DAOs have. But I think if you're, doing a bunch of things at the same time, you just don't have that focus that I think, us here on stage have, which is 100% dedication to the craft of venture. So I think that's something to keep in mind. And then I also just think like during bull cycles, everyone's a long-term investor. When prices go up and to the right, everybody's in it for the long term, and sources of capital multiply. Obviously, when markets change, when a lot of capital also recedes, then what's left is investors that are truly in this for the long term, right? And I think we'll see over the coming months. I think we've already seen a little bit, but I think we'll continue to see over the coming months who's really in this for the long term.
So I would argue that DAOs themselves are not a risk for a venture investor. The way how I understand DAOs, it's just another form of organization, and I think I would say DAO is like very unlucky name for what it actually is, because it stands for like a decentralized autonomous organizations, while these organizations are not decentralized nor autonomous. Yeah, so it's pretty much an internet organization, and it's and maybe when we can simplify it, it's a organization incorporated on the internet. Yeah. So that is like it's a function of structuring. I'm not worried about DAOs. I'm worried about great GPs, targeting the deals that I'm focusing on, like in infrastructure, in the consumer, and it's all about the team. It's not about whether the company is incorporated on the internet or whether it is structured as a VC fund.
Because we've seen in the last year some malicious large investment DAOs, for example, in the phantom ecosystem, who are fighting against each other, and at the end pulling down the entire ecosystem.
Yeah.
So
Because DAOs are good, or are now, I would say, on the spotlight because they are good at fundraising. Yeah, because it's a good structure to fundraise with the global distribution, because like all investors like recognize this, and it's easy to send money like USDC to a smart contract, and you are part of the DAO. Yeah, it's much more difficult to invest in a venture fund that is located in like Switzerland or Cayman or Delaware. Yeah, so I would say that could be one of the reasons that people are exploiting these easy to form organizations to fundraise money from unqualified investors.
This actually goes back a lot longer. In 2016, there was this project called the DAO. Many of you will know and remember that was the first DAO, so to say, living on Ethereum and pooling capital to do exactly that, venture investments.
we had Christoph this morning here.
Great, yeah. So the idea actually isn't new. We've just seen, I would say, more recent iterations over that model, and with many, I'm in touch with many of these projects in different forms. But it's as Dusan also says, it's something that's very hard to coordinate. So many of these entities actually realize that they are under massive regulatory pressure and registered different types of organizations, sometimes in the US, sometimes offshore, actually have to deal with very similar legal restrictions and whom they can onboard. And the even bigger challenges are who is going to make the shots, who is going to take decisions. And that is a big question on many levels. It's not, or mainly on two levels. One level would be, how do you think about portfolio construction? What is the capital pool? How many positions do you want to get exposure to? Initial capital versus reserve capital, all these fun venture metrics you need to think through and take a decision on what kind of a product you want to offer to entrepreneurs and also your members. And that there's a lot of people lacking these kinds of skills or knowledge in these areas. That's one layer. And the other one is then, how do I compose such a portfolio in a way that it actually makes sense? That's something that is not easy to do. But I think, it's always good to see experimentation. And what I like overall is the direction of it, right? That's ultimately democratization of access to these kinds of deals. And we see this also not just in terms of like crypto exposure, but now also expanding into other areas. There's this nascent category called decentralized science. That's bringing the same dynamics, cutting out gatekeepers, empowering creators in that ecosystem that are often researchers or scientists running experiments or inventing stuff in a new context. And there we've seen DAOs that are investing into bio IP, for example, patents that are tokenized in the form of NFTs. So this goes way broader than just venture investing. There are all kinds of, I believe, new asset classes that will emerge in our ecosystem, where you could come up with these kinds of vehicles. My hope would be that we find a good compromise between clear regulations and the couple of ownership and liability. That's currently the biggest challenge I see with DAOs across the board. Everybody wants to be a member, wants to have exposure, but as soon as something goes wrong, nobody wants to be liable, and neither the individual members nor the organization as such, in cases where it's not even a legal person, so you cannot act against it. So I agree that the term DAO is super confusing, and we should rather talk about protocols that are sets of rules that are self-enforcing and ideally not subject to governance, very minimized governance, if not no governance. Then you could call it a DAO, so something like Bitcoin, maybe Ethereum, and that's already debatable. And everything else that requires human coordination and contractual relationships with the outside world, be it contractors, could be designers, could be developers. There you're already in the sphere of companies, and it's not realistic that we can avoid regulation in these contexts, unfortunately.
So thank you for your position on this. I have also here a master who tries to keep me in time. So I think we are at the end of our time slot, but I really appreciated a lot having that conversation with you here on the stage, and I hope you also enjoyed following that conversation with these professional experts and enthusiasts and crypto fans and lovers, not fans, but really lovers. So thank you for coming. Thank you for having the discussion.
Thank you for inviting us.